Welcome to Beyond Stocks and PE, a guide to investing in alternative assets. In this video, we'll explore the fascinating world of alternative investments. Why are sophisticated investors moving beyond traditional stocks and private equity? Traditional portfolios heavily rely on equities and bonds. However, during market crises, their correlations often spike, eroding diversification benefits. Investors are now searching for true diversification, assets that behave differently across various market cycles. Alternative assets are emerging as a crucial way to enhance risk-adjusted returns and find new sources of alpha. The primary driver for this shift is the relentless search for higher, non-correlated returns. Unlike public market assets, alternatives often offer unique income streams and appreciation potential that are not tied to traditional stock indexes. Pension funds, family offices, and sovereign wealth funds are increasingly allocating larger portions of their portfolios to these alternative investments. The goal is to balance portfolios with uncorrelated cash flows and unique growth potential, offering a hedge against market volatility. Now let's dive into some of the most exciting unconventional assets and their investment theses. First, we have music royalties, which represent stable income from intellectual property. Royalties generate predictable, recurring cash flows from various sources like streaming, radio play, and licensing agreements. Major funds, such as Hypnosis and Blackstone, are actively acquiring extensive music catalogs, transforming them into income-producing assets. Next up is fine art, a tangible asset class with significant appreciation potential. Fine art is increasingly seen as a robust store of value, exhibiting a low correlation to volatile financial markets. Auction houses and platforms like Masterworks are democratizing access, allowing fractional ownership of masterpieces. Litigation finance offers non-correlated returns derived from legal outcomes. This involves providing funding for lawsuits in exchange for a share of future settlements or awards. The attractiveness of litigation finance stems from its returns being tied to specific legal outcomes rather than broader market movements. Finally, we explore niche real estate sectors offering unique investment opportunities. These go beyond traditional offices and malls, encompassing data centers, cold storage facilities, life sciences labs, and senior housing. Each of these niche sectors benefits from specialized demand drivers, creating unique income and growth profiles insulated from general market fluctuations. Now let's understand why these alternative assets are often found in the private markets. These assets naturally fit into private equity-style structures, which are designed for longer lockup periods due to their illiquid nature. Institutions favor private markets for their flexibility, bespoke structuring capabilities, and specialized expertise in managing illiquid assets. Technology is rapidly changing the landscape of alternative investments, particularly through fractionalization and data analytics. Fractionalization is democratizing access to high-value assets once exclusive to the ultra-wealthy. Through tokenization and fintech platforms, high-value assets are becoming accessible to smaller, individual investors. This includes fractional ownership of masterpieces of art, portions of music catalogs, and even rare collectibles. Advanced data analytics are enhancing decision-making across all alternative asset classes. Leveraging big data improves valuation accuracy, enhances risk management, and refines deal sourcing strategies. AI-driven models help investors predict demand, forecast price trends, and optimize portfolio outcomes with greater precision. However, investing in alternative assets isn't without its challenges and risks. The primary challenges include valuation complexity and illiquidity. Unlike publicly traded stocks, many alternative assets lack transparent, real-time pricing mechanisms, making valuation difficult. Investors often face significant hurdles when trying to exit positions quickly due to the limited number of buyers in private markets. Another significant challenge is regulatory uncertainty, particularly in emerging areas. Assets like tokenized securities and litigation finance often operate in regulatory gray areas, creating potential legal and compliance risks. Compliance frameworks and investor protection regulations for these novel asset classes are still in their nascent stages and continue to evolve. Despite the challenges, the future outlook for alternative assets is one of continued diversification and institutionalization. Alternative assets are rapidly shifting from niche investments to mainstream allocation targets for large investment portfolios. We expect growing inflows into these asset classes as institutional investors build dedicated mandates and specialized teams. Retail access, facilitated by fintech platforms, will continue to expand, democratizing opportunities for a broader range of investors. The role of specialization cannot be overstated. It is crucial for navigating each niche asset class effectively. Success in alternative investments demands deep expertise and nuanced understanding within each specific asset class. For instance, the skill set required for a music royalties investor is vastly different from that of a litigation fund manager. Specialization ensures better risk-adjusted outcomes and allows investors to capitalize on unique opportunities within these complex markets. Now let's explore how institutional investors and family offices typically gain access to these alternative assets. Large institutional players often build dedicated direct investment teams or forge partnerships with specialized alternative asset managers. Family offices are increasingly exploring niche alternatives, particularly for legacy wealth preservation and bespoke portfolio diversification. The ecosystem is maturing, with the emergence of specialized funds, platforms, and exchanges creating more structured and accessible entry points. In conclusion, alternative assets offer compelling opportunities for diversification and enhanced returns. Remember, this video is for educational purposes only and not financial advice. Always consult with a qualified financial advisor before making any investment decisions. Thank you for watching.